Hi guys, welcome back to the class. Today we are doing a session on the amendments which are applicable for CA final for Jan 26. So from whoever teacher you have studied, there's no issue. There's no as such amendments. There are only 5 amendments which have come in the book. They basically are RTP. So go to ICAI website, download the RTP revision test papers for Jan 26. I hope you guys have started studying. You guys have been concentrating and appearing. You'll appear with good confidence and clear with good marks. Now, I said there's no major change in the syllabus what you have studied for the previous attempt September 25, or if you have taken me from some other teacher. As such, there is no change. Only 5 points have come, because of which there is no answer may change. Two are clarificatory amendments, two are additions, one is pure change basically. Okay, so let's discuss one by one. I'll tell you what to do. Now, the first amendment talks about NBFC. You'll ask me, sir, do I find these amendments? In the RTP of Jan 26. For sure, you will find a 4 or 5 marker from this amendment. Okay. Now, if you know there's a chapter called as NBFC. In NBFC, we have added a definition of NBFC MFI. We have studied MFI concept. MFI is like micro financial institution, which basically talks about like uh, giving loan to vegetable vendor, auto rickshaw wala guy, cab guy, small micro financial institution. Okay, so they have defined what is MFI. Previously, MFI was not defined. Now they have defined. It means a non-depositing NBFC which has a minimum of 60% of total assets. So it's a non-depositing NBFC where the 60% of the total assets netted off by intangibles on ongoing basis is deployed towards microfinance loans. Towards which loan? Microfinance loans. My first point is it is non-depositing NBFC. That means they cannot accept deposits. Number two is my minimum 60% of the total asset. That means out of 100 rupee ka asset, my 60 rupees ka loan, 60% of the loan should be towards vegetable vendor, wala guys, where then auto guy, all those people. Okay, net of by intangible assets. Then on an ongoing basis deployed towards microfinance loans. This is the definition. First, non-deposit taking NBFC, 60% of the total assets netted off by intangible assets. Means if I have a 100 ka total assets, 2 rupees is intangible they have given. So 98 ka 60%. 98 ka 60% you have to do. Okay, that would be used towards microfinance. Then you are what? NBFC MFI. Now you will ask me, sir, where is the implication of this? Now, if you have studied through me, you'll be having our main book. Now in main book, come to NBFC chapter. Page number 402. Page number 402. Page number could be here and there. NBFC chapter mein there's a definition of, the word calls microfinance companies. So put a star there, microfinance companies, and write on the terrace, refer Jan 26 RTP first amendment. For Jan 26 RTP first amendment. NBFC microfinance company का definition they have given. Second, if you have studied from some other teacher, in that teacher ka book you do the marking. You remember there was a calculation of tier 1 and tier 2 risk weighted asset we calculate, right? So we calculate the capital risk asset ratio where we calculate tier 1 and tier 2. So as such, it's not an amendment, it's a clarification. What clarification is? So when we calculate for tier 1 capital, or NBFCs engage in lending against gold jewelry, you know that tier 1 plus tier 2 should be 15%, out of which 10% should be 10%, out of which tier 1 should be 10%, but if you're doing gold ka business, tier 1 will be 12%, correct? So what they have added, when you're calculating the 12%, so you need to consider two more things now. As such, answer me there's no change. Okay? The treatment to on balance sheet and off balance sheet items for capital adequacy shall be provided as per the direction respective. On what they have added, this NBFC shall also adhere to the provisions of direction on treatment of deferred tax asset and deferred tax liability. So first they have to concentrate. So when you're calculating tier 1 for gold jewelry, you have to understand the provisions of treatment of DT and DTA. That's first. So it's a clarificatory amendment. Number two, you also have to comply with RBI lending against gold and silver collateral direction 2025. Number two, they have to comply with what? RBI lending against gold and silver collateral direction 2025. So these two things they have added for calculation of tier 1. As such, there is no illustrations. What is the impact? It's not given anywhere. Just it's a clarificatory amendment. So maybe in theory they are asking, so right, when you calculate tier 1 for gold jewelry, they also have to consider ETA, DTL ka provisions and lending against gold and silver collateral direction 2025. That's second amendment. Where is the implication of this? In our main book, so when you are calculating 404, page number 404, capital requirements, when you calculate this capital requirements, lending against gold jewelry wala point, get tier 1 capital after, can you see this in your book, page number 404? Just put a dot, I mean star here and write there refer amendment to Jan 26 RTP. Refer amendment to Jan 26 RTP. So should the second amendment, no changes. Third amendment. It is basically in the main book we have not done this. We have done it from the module. You are supposed to calculate RW. So RW mein what they have added. So towards the end, other assets. If you see there's an asset called as others. Others mein what they have written included ROU assets, right of use. You must have studied in leases chapter right of use asset. So so it is again an addition in that RWA calculation. So it is from the module. I'll show you where it is. So module page 14.94. 14.94 page, there's something called as other assets. Other assets mean that's income tax, direct tax, so that's TDS, advance tax paid, interest due on government securities, others. So others mean what they have added, including ROU. As such, answer means not adding a change. Again, it's a clarificatory amendment. Others will include what? Including ROU. So maybe an MCQ they can test, including ROU. So there was a question on this attempt September 25 May on this calculation, a risk weighted May. So make this, you do it from the module. And there was an MCQ. Please check September 25 ka suggested. Okay. For the first time it came. So here they have added. So understood three amendments. One was MFI ka definition they have added. Number two, in tier 1 calculation for gold jewelry, they have added two important things, DTA, DTL ka provision plus lending against gold jewelry collateral. The direction they have to comply. Number three, this others including ROUS. NBFC ka all amendments they have done. Over. Now, fourth. Now fourth amendment is basically towards professional ethics. Now both fourth and fifth is professional ethics. Do you remember clause number 9, part 1, first schedule, 911? We used to say ASCERTAIN. ASCERTAIN. 9. 9 alphabets, clause number 9. That's correct. So we used to say you have to comply with the provision of section 139 to 140. Correct. Now ICAI have amended that it says you have to comply. In the module, it was written 139 to 140 only. Now you will write what? 139 to 141. 149, 139 talks about appointment. 140 removal and resignation. 141 is qualification. Basically, Companies Act you have to come. Plus, they have to also comply with section 225 of Companies Act 1956. This was also written there. The replica provision was 139 to 141. For the change. 139, 140, 141 they have added, or any other law pertaining to the appointment of auditors. So what they have added? Any other law pertaining to the appointment of auditors. Any other law. Like you get, once you're auditor, imagine a banking company. So you have to comply with, like you have to do CISA, DISA. Where it is written? It is written in Banking Regulation Act. If you are doing auditing of a listed company, you have need to have a peer review certificate. Where it is written? It is written in SEBI Act. So you have to comply with those provisions also. So on this line, any other law pertaining to appointment, could be banking, could be insurance, it could be like insurance, when joint audit is mandatory. So where it is written in insurance card. So auditor, you comply with that provision. have to comply with 225 of Companies Act 1956, plus you have to comply with the 113 and 140, 141 of the Companies Act 2013, plus any other law pertaining to appointment of the auditors or any other law. Okay, three things you have to complete. So what's the implication? Go to main book, come to clause number 9, professional ethics chapter. That would be around on page number 560. 560, clause number 9, maybe 560, 561, here and there's one page, okay? Accepts an appointment as an auditor of a company without first ascertaining from me the requirement of section 130 and 140, 141. Yes, you have already written, okay? Cancel 142. Ideally, you have to comply, but they have not written as 142 is remuneration, okay? Plus section 225 of Companies Act 1956, plus any other law applicable for appointment. Ideally, you have to ascertain the provision of 130 and 140, 141 plus Companies Act 1956 or 225 section plus any other law for timing in force which is applicable for appointment of auditor. So this would be there in the paper for sure. Such they will get SEBI. I think 90% either SEBI, banking or insurance. Those are the only other law which is applicable as such, which talks about more things about appointment. Yes, it is similar to Companies Act only. SEBI may like peer review, insurance may joint audit, banking may studies are qualified. So they are written there. Okay, cool. That's fourth amendment. Last amendment, fifth. People who have studied like long back, the page number will be here and there, but the book content is same. We keep on adding, deleting the stuff on the times. So if you have studied through old book, page number is here and there. So as such, there's no change. Those five things have been added. Whatever you have taken, whenever you have taken the class, the same book plus this five changes. Fifth change. New clause have come. Clause number 5, part 2, second schedule. Now, if you remember, we used to do like this. Two schedule first, second, 1, 2, 3, 2 up, 2 down, total 19. Balancing was 15. We should say 10, 4, 1. Correct? Now it has changed and total was 34. This has changed. This has changed. Now it has become 35. This has become 16. This has become 5. What they have added? Previous level only 4 clauses. Now they have added clause number 5, part number 2, second schedule. So second schedule, part number 2, clause number 5. They have added new clause. Acts as an auditor of a company in contravention of the provision of Companies Act. Act as an auditor of a company in provisions in contravention of the provision of the Companies Act. That means if you were disqualified, still you are continuing the audit of a company. That means you are guilty under clause 5, part 2, second schedule. I choose 522. Clause 5, part 2, second schedule. Where to add this? Come to page number 578. 578. After clause number 4, you will add clause number 5. It's added. It's added. It's a new clause. For sure, you will see either 522 or 911 in the paper. If you are disqualified by law, still you are appointed as an auditor, you are continuing the, you are disqualified. You are not vacated the office, so you are guilty. Guilty of professional misconduct as per clause 5, part 2, second schedule. Right there, clause 5, clause 5, CLAUSC 5. Like this. So if you are studying from some other teacher, please copy this line in their book also. Act as an auditor of a company in contravention of provision of Companies Act. Act as an auditor of a company in contravention of the provision of Companies Act 2013. Done. Cool. So we have completed 5 amendments. So 3 are in NBFC, 2 are in professional ethics. As such, otherwise no other amendment. Okay. First NBFC MFI 60% remember MCQ will be there. Number two, tier one calculation for gold jewelry. Number three, other assets including RUSS. Number four, professional ethics में clause number 9 में 225 Companies Act 139 140 141 Companies Act 2013 and any other law for timing in course for appointment. And number five is basically clause number five has been specifically added. Act as an auditor in contravention of the Companies Act, provision of Companies Act. So this 5 amendments are. Yes, everything is same. So I've uploaded series of YouTube revision and plus marathon in 100% English on my channel also, and where you're watching this there also it is uploaded. Once you go to my channel see Abhishek Bansal, you will find it 100% English. So revise that. I have given handwritten notes also. My channel will see my telegram ka link also. You can join those telegram ka link, and if you have a doubt regarding audit, you can message me on the telegram, or you can connect with me on Instagram also. I'll share you the telegram ka link to join. So I'm little active on telegram as compared to Instagram to solve the doubts. So academic doubts are taken on telegram only. These are the 5 amendments. So guys, if you have studied through me, confident, we have written handwritten notes, plus the handwritten notes, all like past 5 attempts ka paper, like May 24, September 20, May 24, November 24, May 25, and September 24 attempts. So solve those papers orally. Just see what level ka questions are there. I have shared this analysis also in my Telegram group. I hope you have received it. This analysis says what paper may, what questions are coming. May 24, November 24, May 25, September 20. Can refer to this amendment, I mean this analysis, get an idea which pattern may the chapter is there. Like for example, if I see ethics is coming for like 17 marks, 18 marks, 18 marks, 18. Okay. So this is the links of all the QRs, YouTube, Instagram, Telegram. Connect with me for such. You'll find this PDF in the Telegram. If you're not getting, drop me a message. Okay. So bye bye guys. Take care. Enjoy aim for a rank or 70 plus years earlier. Do recommend to you. Okay. See you soon at the account. Bye bye guys. Take care.